morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, September 5th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the ES in the daily time frame. This is just after we had pre-market data, ADP non-farm employment change coming in about 15 minutes ago at 99K versus a 143K estimate. Way lower than expected. We just had initial jobless claims come in, 227K versus a 231K estimate, and we have additional economic data points coming on later today, including crude oil inventories at 10 a.m. Central and ISM non-manufacturing PMI and prices. Tomorrow morning, Friday morning, we get non-farm payrolls as well. As of right now, you can see the previous session here. We had a digestive day with a modestly downward bias. This is after the downside break and price discovery phase that we saw on Tuesday's trading. This is a downside break from this multi-week range here, and the downside break and hold right now would suggest kind of a rest after battle pattern with the potential for a continuation to the downside. Again, 5,400 could be the next near-term target down below, with a shot at reaching 5360. 5360 is the midpoint of this key range, and the fact that this thing has broken back below the key range high would suggest a rotation back to the midpoint of that key range. So 5400 and 5360 could be the next swing targets to the downside. Right now we want to keep an eye on the previous session's high. If there's a big time break through that high, that could open up a return back within the range. As of right now, the downtrend, the short-term downtrend remains intact, and any test at that high could be defended by bears looking for a bull trap rather, and a bear rotation back down toward 5450 and below. As of right now, inside day, 38% of ADR, 28 points of total range. Downward bias, a breakthrough 5500 starts to open up the downside on a swing basis. Looking at the NQ, similar price action here. The NQ is trading just 45% of ADR. This one's also trading inside day right now. It came within a couple of ticks here of the previous low a few minutes ago and bounced. Inside day, downward bias. This also an outside day price discovery phase to the downside on Tuesday. 2 narrow days at the end of that price discovery phase would be, again, a bearish rest after battle candlestick pattern with the potential to see further weakness up ahead. Initially, the idea was we could be looking at a test at the previous month's midpoint. That's about 18,700, with the shot to see even further weakness from there. Do we drop back towards 750, 17,750? Do we take out the previous key range low there, which is the previous month's low? The fact that this thing gave up the key range high here at the 19,717 level would suggest a midpoint retest at the very least, 18,534, and again a shot to rotate back across the range. So keeping an eye on further downward price discovery, and like the ES, if we were to see a test at the previous session's high, that could become a bull trap here for a rotation back down until proven otherwise. A strong push through that high, though, could open up some strength. So there, gotta judge that high and see if there's a trap or if it's a bullish continuation from an intraday perspective. Looking at crude oil, crude right now up about 1%. This is after heavy selling pressure over the last 3 sessions. This little bounce right now could be met with selling pressure yet again. This thing gave up the 72 level. 72 had been significant support for quite some time. This blue dotted line right there is also the previous year's close price. Previous year's close has been bid all year long. There it is here, being defended, and onward throughout the year. It was taken offered here on Tuesday. That low right there was the low of the year. It took it out yesterday. So this is really digging a hole here to the lowest point of the year so far. This little pullback right now could be seen as a selling opportunity. Bears could be looking to defend into morning strength for another rotation back down, and we're starting to look down into the mid 60s as a downside target zone. 67 would be next, and then 64 would be the previous year's low and the 100% key range target from this key range right here. So if we're breaking down hard here, 64 ultimately could be the next major target zone. If we were to see 64, it could be a big time bounce back toward 72 up ahead. So right now still rotating downward, bears looking to defend into strength, and we could be looking at a push into 64s on a swing basis up ahead. Looking at gold futures, this one's up 1% right now. One thing we mentioned over the last couple of days is the higher value relationship month over month that's developed as gold continues to push higher. Yesterday, as price was testing into this zone, we mentioned this could be an opportunity for bulls to defend and rotate higher into 2600 up above. We're seeing strength right now, and this could lead to new highs up ahead with 2600 and perhaps as high as 2680 up above. So stair-stepping higher and continuing that higher value relationship. Looking at the YM right now perfectly break even at the moment. This one also trading inside day after a Tuesday sell-off. Wednesday's range here was a doji day, and price could be trading mostly within this range, again with a short-term downward bias. The key range, the larger key range that's marked here, has a high right there, and that's 41,427. That rejection there would point to the key range midpoint. That's 39,984. That could be the next swing target down, especially if price fails to hold the 40,750 zone here. Right now, still mostly inside day, range bound, narrow range price action, 36% of ADR with a downward bias until proven otherwise. A little bit of a head and shoulders style pattern beginning to develop. You break through 40,750, it opens up the 40,000 target down below. Looking at Bitcoin, another rotation downward. Big time selling pressure here out of Bitcoin, 3% lower. The previous session we did get ourselves a strong low, and we've been seeing some strong lows here lately. We have been seeing strong lows, so that shows an appetite for responsive buyers to defend into weakness. The problem is we continue to see price push through those pivot lows. Right now through the midpoint of yesterday's range after a strong reversal and finish. And as we mentioned before, this market and crypto in general continue to look heavy. It continues to look heavy, and we may see another flash move lower. So right now, very, very heavy, clear downward price discovery still in play. Any bounce continues to be a selling opportunity until proven otherwise. Staying below the previous session's midpoint here would suggest a push through the previous session's low of 55.25 up ahead. Looking at Ethereum, similar price action out of Ethereum. This one's down nearly 3%, also below the previous session's midpoint. Ethereum had a great rejection yesterday. That was a solid low, a solid recovery and rally from the low, and yet here we are again pushing through the midpoint of that rejection. You can see right there, that's the previous year's close price. Look at how the market is defending prices at that previous year's close. That's a big level. If you look back over here, that's the area where price went bid earlier this year on the Bitcoin spot ETF inflows. To take out that level would open up 2200 for a major test and perhaps even lower. Again, there could be another flash move down that occurs. But again, with every strong push downward, we have been seeing an appetite for responsive bulls to defend. It's just that those lows are not leading to higher highs. Instead, still a very clear downward trend. 8-period average continues to provide resistance. And right now, as long as price remains below that midpoint right there on an intraday basis, we could be looking at lower lows through the 2315 level. All right, that is it for now. We'll see how this plays out here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.